Welcome back to Dukascopy TV. Not only do companies face increasing challenges to perform in the current market, but now they are expected to do it more responsibly. Joining me to discuss this further is Melchoir De Muralt. Thank you for joining me. How do you differentiate your approach to socially responsible investment funds?
In the late 80s, 90s, the industry started to screen the market in trying to isolate the best-in-class company, the one which were dealing the best with society, with sustainable products, with good governance, good practices, a good way of managing their stakeholders. In doing that, the industry created a few indexes, for instance, the Dow Jones Sustainability Index, a lot of local rating agencies, non-financial rating agencies started to emerge in various countries and started to rate companies on their non-financial aspect, social and environmental and governance like. So the industry really developed tremendously in that direction. Every bank's having a socially responsible investment fund, investing in the best-in-class universe of companies. After 15 years of exercise, I would say that industry really changed the mentality of the board, helped companies to seize those challenges, social and environmental challenges. But those investment funds, to be frank, didn't produce above average performance. So the majority of those funds, I would say, did underperform the benchmark, making a big challenge for the socially responsible investment, because if you say I would like to be responsible in investing, but I need as well to get the market, at least the market performance. So we decided 6 years ago to launch a fund which will not absolutely invest in the best in class, which will invest with really classical investment criteria, cash generation, barrier at entries, good product, good valuation, things like that. But we decided to add value in engaging with those companies, trying, instead of selecting the best in class as a number one decision in our process, we really try to select good financial companies with good financials and fundamentals, and then trying in engaging with those companies to create social values, trying to help the companies to be pioneer in the corporate social responsibility side of their business. So that's the approach. It's more a proactive approach, trying to change the company through an active dialogue than to select the best one. At the end, if you look at the classical SRI industry, it's a bit frustrating because you see for European companies, for instance, which is the investment universe of our fund, European engagement funds, you see completely, the portfolios are very similar from one bank to another. You always see the Danone and the Nestlé. For maybe one fund, Nestlé is higher rated, has a higher rating than Danone, or vice versa. But at the end, it doesn't really produce any sense. And 90% of those funds are not exercising their voting rights. So we are exercising our voting rights, and we are engaging the company. And we believe that we can transform the companies which are in our portfolio in engaging actively with them.
Isn't this difficult though? How are you managing to influence change?
Exactly. I think you have the right question, because in fact it's impossible. How can you, even with a 1 billion fund, how can you influence the strategy, the sustainability strategy of a company? It's just impossible. You are minority shareholders. You have no right of challenging the strategy. You can just challenge the governance, the distribution policy, the remuneration of the top management. Even in that case, it's not yet possible. We believe we are able to bridge that frontier because we decided to team up with a foundation, the Guillet Foundation. That foundation was founded by a very prominent industrial family in Switzerland, which decided to create a foundation dedicated to ethics in business. That foundation managed in the early 2005 to manage a collaboration agreement with the United Nations Global Compact, trying to help the Global Compact to provide an assessment on the communication and progress delivered by the company having signed the UN Global Compact Treaty. That was exactly answering to the needs of companies having signed the Global Compact. For your information, now we have about 7,000 company signatories of the Global Compact, among them the biggest one, the Total, the BP, the Nestlé, the L'Oréal, and you name it. And they have to report every year on the progress they made in grasping those 10 principles into their value chain: human rights, labor rights, environmental issues, and anti-corruption issues, which is a real challenge. In fact, it's quite impossible at the end to do it 100%, but at least they engaged to do it in signing that treaty. The chairman, the CEO, signed the treaty and committing themselves to grasp those 10 principles into the value chain.
So how is a zero tolerance policy or strategy implemented in business? How do you bring that in?
That's a very good point, because if you look precisely at the Global Compact, once a company has signed the treaty, the 10 principles, very often the CEO or the chairman in the sustainability report says, for example, in terms of corruption, zero tolerance. But you can understand that it's not easy. It's not easy to implement. It's quite impossible at the end to be sure to implement that zero strategy policy. So my belief is a company can succeed in engaging properly with stakeholders, in monitoring years after years progresses, in defining new objectives. You need to communicate on your progress. You cannot be 100% clean for the 10 principles. It's very difficult. It's a move, it's a trend, and you need to show that you try to progress until you're able really to achieve your 100% success rate.
And finally, what obstacles are you facing in the current climate when you're trying to make investors act more responsibly?
So the first challenge, of course, is to be received by the management. As a shareholders, we have no right to discuss with the management, to be frank. So our association with the United Nations Global Compacts give the alibi to be able to discuss with the management, because as a shareholders, we pretend at the end that the companies which is grasping those 10 principles into its value chain will create value for us shareholders and for the society as a whole. So we are received as shareholders quite well, so that's the first challenge. Then, of course, one of our obstacles sometimes, but it's changing very rapidly, I tell you, is that the head of corporate social responsibility or sustainability, sometimes of communication, in fact, is more in a defense position, and his first job is managing communication towards NGOs, consumers, civil society, and so on and so forth. And they are not sometimes very closely associated to the strategy of the company. So sometimes they use us just to help them to better communicate, to identify some inconsistency into their communication. But very often we help them to have a clear strategic, business-oriented message toward the general, toward the board and the top managers of the company. Sometimes we believe that we can empower the head of corporate social responsibility in helping him to become more strategic into the company. That's the major obstacle. The current economic crisis, I think, does not slow down the process of big multinational seizing more and more their social responsibility. Companies now understand that becoming a good corporate citizens will help them to reduce the risk and to get new business opportunity and to attract long-term loyal shareholders. So I think that trend is intact. But sometimes the challenge is to jump from the communication trap of a company to the strategy designing of that same strategy, which is at the end the aim of our engagement, of course.
Well, thanks for joining me today, Melchoir. Well, that's all we've got time for right now. Thank you for tuning in today, and please don't forget to click back to Dukascopy for more updates and interviews.